Thank you, Nanette, and good day, everybody, and welcome to Eid Bailey's Town Hall on COVID-19 for states and local governments. Again, my name is Eric Berman, and I'll be the moderator today for this important meeting with all of you. We're proud to have you as clients and welcome you with open arms, even if you're not clients to this important meeting. Over the next approximately 90 minutes, I'm going to be joined by 4 other partners and managers and principals from around the firm. Derek Flanagan is a partner in our Fargo, North Dakota office, and he's worked with many governments over the last 15 years of all sizes. With him is Brian Stavanger, also a partner in Fargo, who over the last 19 years has served many governments, also in the Great Plains states and around the country. Excuse me. We're glad to have Anders Eriksson with us. He is Eid Bailey's principal in charge of cybersecurity. It's such an important issue these days with so many of us working remotely and adjusting to this new normal. Anders has served all levels of government, federal, state, and local. He's in our Boise office. And then lastly, but not least, Eric Hansen is a senior manager in our specialty services practice out of Sioux Falls, South Dakota. He's a certified fraud examiner, forensic interviewer, and certified law enforcement officer, all of which are important when we think about internal controls changes from, again, this new normal that we're dealing with today and as we go forward. We have a lot of information for you today. There are many participants, many of which we have participants still joining, and we're glad you're with us today. And if you haven't asked a question already, please type your questions into the chat box, as Nanette mentioned, as we go along. We'll try to get to your questions later on today, but if we don't get to them, we're going to group them and hopefully release them as frequently asked questions at some point very soon. The focus of our agenda is on the screen. Obviously, the impact of COVID-19 on governments, thinking about cash flow projections, taxes, and other assumptions as we continue in this crisis, and perhaps as importantly, begin to emerge from the crisis, what sort of cybersecurity issues that we're starting to see, maybe something you haven't thought about yet. How will your audit be impacted for you June 30s that are out there, or March 31st that are just getting underway? You know, by the way, what will the GASB be doing? After all, it seems like eons ago that we were all consumed by GASB 84 up until about 3-4 weeks ago. And then all of a sudden, yeah, so yes, the GASB's thinking about it. And again, if we do have some time for questions, we'll try to get to your questions. Real quick, I just actually right before this webinar, I was on a call that was hosted by the Volcker Alliance, and they were talking about state and local government responses, and it was also hosted by the University of Pennsylvania Wharton School. And they were talking about state and local government responses and fiscal constraints that are likely going to start to be showing up. One of the panelists mentioned a $110 billion drop in tax revenue for the year ended June 30 nationwide. That's not individual governments, that's every government. And, you know, talking about various aspects that governments could be considering as we go forth. And I'll mention a few of those as we go forward into this session. I've said many times over the last 30 years in this profession, what you are doing in public service, either as an employee or providing services to the public sector, what we do is the most honorable thing. You are on the front lines. You are serving your neighbors, giving it all you have day in and day out. And it is during these times of crisis, such as now, that we're looked upon as our community's beacons of hope, be it working in the public safety function, a public hospital, or keeping the vital books and records for all of government to be honest and transparent. 2020 is hopefully a once-in-a-lifetime experience for you, but for many of us old-timers like me, we've been through this more than once. As I recently wrote in a column for CCH, a few of us remember on October 17th, 1989, a little after 5 o'clock Pacific time, many of us were watching the World Series between the Giants and the A's, and then all of a sudden the television screen went blank, and the broadcasters came on after a few seconds and said, "We've had an earthquake," and it was happening on live television. A little over a decade later than that, we all remember where we were on a September morning. I was in New York, actually coming back from a GASB derivatives task force meeting, which eventually became GASB 53. I didn't have the ability to watch what was happening on the Today Show, but many of us did. I was too busy stuck on an Amtrak train heading north in the Bronx. And all of us remember looking back hopelessly at Manhattan. These events, many others, are sometimes known in the immortal words of former Defense Secretary Donald Rumsfeld. These are known as black swans, unusual events that we tend to forget about but tragically happen. And the time we are living in is tragically one of those times. Thinking back about the black swans that have arrived on the space of the last several weeks, obviously there's a great economic impact. We had unemployment numbers being updated this morning about 2 hours ago or 3 hours ago, which were not good. Nearly all educational institutions at all levels have been shut down. The Dow Jones is obviously very volatile. We've had trillions in stimulus approved by the federal government and likely trillions more coming, but at what cost to future generations? And that was one point that was put on by the Volcker Alliance this morning. We've had some supply chain disruptions. We've had all of you perhaps working remotely rather quickly and gearing that up to speed. We've had some revenue disruptions and so on. But a lot of this had been known. A lot of this had been risks that have been in the market. You know, a lot of us have been working remotely for years, including myself. There's been tremendous fiscal pressure on institutions such as hospitals and institutions of higher education. Even the National Association of State Budget Officers reported that states were only going to be growing by 2.6% in revenue, and that report came out in late December for 2020. Despite spending growth of 5.8% last year. So we've known this was coming all along. Luckily, rainy day fund balances as a percentage of general fund spending hit records over the last few years, but still the amount of rainy day funds across the country in all levels of government average less than 30 days of business, unless you happen to be in a place like Illinois or Kansas, and Illinois only had about $4 million sitting in the rainy day fund at the end of the fiscal year, and Kansas didn't have anything. Also, we've had you know, some instability in unemployment, and so this has all been known, and unfortunately it's happening all at once, and we just need to get through this together. So what now? Let's start a discussion on COVID-19 and governments and what some governments are going to be doing. I'd like to hand it over to you, Derek Flanagan, and why don't you take us through what you're seeing?
Thank you, Eric. I am going to take you through the impact of COVID-19 on governments, specifically the updated legislation that we are aware of to this point. There's been a lot of chatter about COVID-19 and the impacts on governments. I'm sure everyone's emails have been inundated with information surrounding the impacts of the coronavirus on governments. And hopefully we can give you some information here today that can help you address your concerns related to the coronavirus. Okay, first off, the CARES Act. With governments, there was money available for governments, mostly to the states. Unless you are a population of over 500,000, you are not getting funding directly related to the CARES Act. In a lot of cases, it's going to the states, and then the states will determine how that funding will be dispersed. If you are in a situation where you are in a county or a city of a population of over 500,000, you may have received and been eligible for funding directly. But for the most part, this funding has been given directly to states, and then it's up to them at their discretion on how they want to disperse those funds. As Eric mentioned, there's constantly chatter about more stimulus packages coming out. In fact, late last week, the Municipal Liquidity Facility came out, and I'll talk about that on a subsequent slide. But this has been a very fluid and evolving situation where every day we're learning more and more information. Even just with the CARES Act having been out, there's still a lot of confusion and unknowns surrounding the CARES Act. And a lot of people, we're getting a lot of questions from people. And so if you have questions, know that you're not alone. In a lot of cases, we don't have the answer immediately, but we will do the research and get that information and answer to you. With the emergency paid sick leave and FMLA, those two programs are programs that governments have to comply with. You go through those criteria to determine if an employee is eligible for sick leave and or additional leave under FMLA if no childcare is available to them. And if they are eligible, you have to comply with these and pay those employees. However, you do not have reimbursements available. The reimbursement comes in the form of a tax credit that governments are not eligible for. However, there is additional funding to existing grant programs, and we've listed a number of those here on this slide, and this is additional. These programs got a boost in funding related to COVID-19. And you can see some of the dollars here are significant. $100 billion for Public Health and Social Services Emergency Fund. Still a lot of information to come out on how to access these grants. In some cases, there may be an application process. In some cases, you may just want to reach out to your contacts within these funding agencies to see if it's just an increase in your regular amounts or if there are application processes and if there's additional paperwork that needs to be completed in order to become eligible for these grants. But just know that there is a lot of additional funding, and to be proactive in seeking out that additional funding. In terms of paying staff under federally funded positions, the OMB issued two memorandums late March, M2011 and M2017, and these memos go directly to the awarding agencies. 11 was to provide flexibility specific to essential research and services necessary to carry out the emergency response to COVID-19. But 17 expanded the scope of recipients affected by the loss of operational capacity and increased costs due to COVID-19. So 17 expanded the scope of the recipients, and within that, it also detailed that awarding agencies may they have the option. They may allow recipients to continue to charge salaries and benefits to federal awards if it's consistent with a policy for paying salaries under extraordinary circumstances. In any case, if you do have questions, we would encourage you to reach out to the awarding agencies and your federal contacts to work through those questions to make sure that you are eligible for something like this, paying salaries under federally funded positions during this closure. We would encourage you to be proactive and make sure that you are on the front end, because you're gonna have to keep detailed records if you are eligible, and you're just gonna wanna have all that information available for auditors and in future cases if people are requesting that information. Also within M2017, there is information about various timelines and extension of deadlines specific to either reporting requirements and or potentially with your audit timelines. So the M27 is about a 5-page document. If any of this is of interest to you, I would encourage you, a quick Google search will find you OMB Memorandum 2017, and it's only 5 pages. Read through that, it has a lot of details and a lot of good information in it. I mentioned that late last week, the US Treasury announced a lending program that is specific to governments. It is MLF, which is short for Municipal Liquidity Facility. And this financing is provided directly to states, counties, and cities. The purpose of which is to ensure funds necessary to provide essential services to citizens. And so this one's a little more vague. It says right in there, it's to help offset the delay in tax receipts caused by the deferral of the tax deadline, and also to help offset short-term losses in tax revenues due to reduced business and consumer activity. And that would really apply, I would suspect that that applies to almost everyone. As I mentioned, this came out late last week. There are still a lot of details to come on this. In fact, they have not announced how to apply for it or what the next steps are for any governments that want to pursue this. And so stay tuned on this. More information will be available, and we will pass along that information as soon as it becomes available to us. One of the things that was available, though, was that it does say that this program will cease on September 30th, 2020, unless they opt to extend the program. So they have announced that it's till September 30th. Stay tuned for more information on this MLF, but this was announced by the US Treasury and is specific to governments. Another big challenge that governments are facing in this COVID-19 crisis is budgeting and cash flow projections, and I'm going to turn it over to Eric to address those 2 items.
Well, thank you, Derek, and certainly again on the MLF, we're learning as we go along. Apparently, the U.S. Treasury is going to put on its website a set of frequently asked questions shortly. I heard that about an hour and a half ago, but right before the webinar, I checked, and it wasn't up as of yet. It might have gone on by now. And certainly the importance of doing a cash flow analysis, a forward-looking cash flow analysis, is starting to become more and more important. And it's certainly one of the lessons I personally learned from the Great Recession back in 2008. When I was a deputy state controller back then, I had to do a daily cash flow with our treasurer and receiver general. And we had to have it ready by 8 o'clock every morning for our governor at that time to figure out what bills we could pay that day. It was that bad. And so I'm sure at some point you may be pressed into service to do something similar, if not already. And so taking into account the CARES Act money that may be available for you is certainly one of those inflows that that you're going to need to take into account. And as Derek mentioned, there are a bunch of inflows that are available from the various federal agencies. You may want to check directly with your federal agency, or alternatively with your senator or congressman as to what is coming towards your jurisdiction as soon as you can. To help you as part of this cash flow analysis, you may need to prepare. A couple of other things that are within the CARES Act. The extension of the Rio ID deadline will help a few states out in terms of their licensing. $30 billion for educational stabilization funds for states, school districts, and institutions of higher education. And that's patterned off of what occurred with the American Recovery and Reinvestment Act of 2008. It's almost the same mechanism that was there 12 years ago. There's $400 million in election security grants, and I don't know if you saw in this morning's paper, newspapers, but Congress is already talking about expanding that for in advance of November. There's also unemployment assistance for an additional 4 months, which many of you may already be dealing with. At a state level, one thing that was mentioned during the Volcker call is that it is suspected that many states across the country will be doing what they did during the Great Recession and taking out loans from the United States Department of Labor. And so that should factor into your cash flow analysis as well. But again, so where does this leave all of you in terms of budget planning? Well, in many situations, budgets have already been passed. Many governments have passed budgets prior to March 1st. They may need to revisit them. In many states, in many situations of local governments as well, budgets may need to be cut. Modeling may need to just be done just like I did for cash flows back in the Great Recession, assuming varying percentages of cuts on taxation and adjustments up on grants. Many governments may also have to revisit baseline appropriations and say, okay, is that appropriation actually going to go forward, and at what cost or what expansion? We all know that budgets are primarily built off of prior numbers, but if the prior numbers are not the current economic reality, a fresh start may be needed. In many situations, governments may have to do kind of what our parents taught us, balance needs versus wants. Right now, we're just in a little bit of a revenue shock, and we need to all consider that. There are opportunities out there. We are in a time period of low interest rates, and perhaps consider the impact on those low rates in borrowing for capital projects. One thing that has gone on in my jurisdiction, I'm in Massachusetts, we were able to close a $1 billion bond anticipation note over the last couple of days. And so it might not be a bad idea to take advantage of the low interest rates as long as you have the capacity to do so. Capital projects can obviously stimulate the local economy, increase payroll and income taxes, and take care of things like infrastructure needs, broadband capacity, and so on at a potentially lower cost than in recent years. This, again, assumes that your government has the capacity to borrow and the willingness to take on long-term projects and costs. The Government Finance Officer Association has also issued a report called Cash is King on their COVID-19 website with some decent ideas and, frankly, some stark realities. As I mentioned, each have their strengths and weaknesses based on your government situation. You may not be able to share personnel, for example. As I just mentioned, your government may be able to increase capital spending as a local stimulus, certainly furloughs, hiring freezes, Not replacing vacant positions and so on are on the table for many governments. But your government may not be able to reduce certain long-term contracts without serious renegotiation from your vendors. Many vendors would rather stretch the length of a contract with current terms rather than reduce, and in many cases, that would be preferable to you as well as a government. Delaying payments is a non-starter for many governments out there and for vendors, but looking for pockets of money is low-hanging fruit. During the 9/11 recession and the Great Recession, I found tons of pools of funds quietly managed at agencies, but you have to be careful. A pool of money in a fund is usually tied to a legislative person's priority. So a word of advice, before you move some funds from one fund to another as a way to fund current operations, consider it very wisely and obtain agreement from your Ways and Means members or from the legislative person that's involved. You can also find pools of money by monetizing assets. Another thing I did 18, 19 years ago was to sell a state office building for $250 million and then leased back half of it for our revenue department. The other half in surrounding land was turned into housing. That might not be a bad idea again. And, when we get back to talking about GAP, GASB 87 does have guidance on sales and leasebacks, but there are very specific provisions that are in there that need to be met for the terms of GASB 87 to be met. Just remember that every time that you do one of these one-offs, that one-off is not available to you in a future year. So consider that very carefully as you go forth. Using this and other tools and information that you may have, putting together a cash flow projection is going to be very important. I usually like to say start with your latest reconciled cash, assuming you can reconcile cash, of course, knowing that there are going to be adjustments you need to make. You're going to add in projected and adjusted revenues of all types based on the information you have at hand. Knowing that taxation will potentially decline, but grant draws will potentially increase. Remember, those grant draws may be one time. The next thing you need to do is add in investment earnings as long as they're material. And for deductions, take a snapshot of unspent appropriations as of the day you prepare the cash flow and adjust the unspent amounts for any approved reductions in appropriations. You don't need to do things by individual appropriations or funds. Just major classes are fine because you want to get things done. And they don't have to be as perfect as you may desire. Next, adjust the previous calculation, and as I just mentioned, you don't need to be perfect. Any deficit will show off as short-term borrowing needs, and any surplus carries to the next day. Now, we're going to spend a lot more time with you over in a couple of weeks. We're going to put on another webinar town hall on budget planning and cash flow planning, going through this crisis together. So stay tuned. With that, I'd like to hand it over. To Anders Eriksson, who's our principal in charge of cybersecurity. So Anders, what are you seeing in terms of cyber risks, and what are the key considerations when we're all working remotely?
Thanks, Eric. I appreciate the opportunity to be here today. We definitely are in a time of transition. Many of your organizations have been experiencing pretty significant changes in how you interact with technology, specifically transitioning a lot of employees. For some of you, the bulk of your workforce is being transitioned to remote work to work remotely. So we want to just take a few minutes and talk about some of the risks that are associated with a remote workforce. There was a study that was put out by OpenVPN, and they identified some of these risks. They talked about how there's an increase in incidents. These are security incidents where there was either a data loss or we had some activity that indicated somebody was on the system or accessing our data that shouldn't have been. But there's an increase of these security incidents when we had remote workers. So 36% of organizations had dealt with a security incident due to an unsecure remote worker. We see that security professionals are more weary about remote workers. It's just a challenge for them. They believe remote workers are not secure, and they feel that their staff are remote staff are a greater risk than people who are on site. So just be thinking about these, and as you're beginning to transition staff to work off site, just recognize there are risks and added risks to your systems, and more importantly, the data that you are trying to protect, because that data is no longer under the same amount of controls you used to have. So I want to talk a little bit about why this is a risk. Why is it that what is the big deal with somebody working remotely? And I don't want to go into a lot of technical details, but wanted to create this picture for you so you can kind of see what the challenge is. On the left side of the screen there is this traditional corporate network. We've got an office building. We have a physical location. Sometimes we're multiple locations, but our systems are still behind this firewall. We've got this firewall that separates our corporate network from the internet, and we work behind this firewall, and it keeps our data safe for the most part. And so while we're operating behind this firewall, we're pretty safe in how we transmit data and what we share. But now when we give a user a laptop or give them access from their home, they take that, they go back to their home, they connect via a Wi-Fi router, and now they're trying to access data behind our firewall, and they have to go through the internet. We represent the internet with this big cloud, and the whole purpose of doing that is because we don't know what's in there. It's nebulous. There are bad actors. There are people with malicious intent, and our data's got to traverse this unknown network and get back through our firewall back to our safe location to get the data. And now our safe data is getting put back through the firewall, through the internet, to our remote worker. And we've got to find a way to make sure that connection is secure. And now we've got whole departments or organizations that are being removed off-site, working remotely, and the amount of data going between our homes, these computers in our homes, through the Wi-Fi networks that we are broadcasting to our neighborhoods, and back through the internet to the firewall. There's a lot of data, and so we got to make sure we're just considering all the things that potentially could put that data at risk. So a couple of key questions, considerations. We're not going to take a lot of time about things, but just think about how you're doing these things. And if you have questions, it's worth a conversation internally with leadership and with IT to think about, well, are we considering all the things we should? Questions like, have you implemented tools for secure connectivity and data transfer? Again, we're trying to get from an employee's home back to behind our firewall where our data is safe. We got to make sure that data is secure, because the internet isn't inherently, or data that's passed across the internet is not inherently secured. It's open, it's available. Anybody could pick that data off of the internet. They could, if it's not encrypted, they could read it, and it would basically be disclosed. So we got to make sure we've got the appropriate security in place for that data transfer. What can your remote workers do with your data? So if I'm accessing data from home, can I take that data and pull it down off my network now? Can I put it onto a USB drive? Could I transfer it to a different computer? Now all of a sudden we've got to be worried about, where is the data going once it's outside of our physical location? What are our employees doing with it? And that kind of leads to the third one there. Have you trained and educated your workforce on how to be secure when working off-site? This is one of the most important things we can do, is just enable our people to understand that they are a part of this. They play a huge role in the security of our organization now. And if they don't have their home network set up correctly, it could have an impact on the security of our organization. So we got to educate them and share with them the information that can empower them to be safe. And how do you verify the identities of remote workers when they're connecting to your systems? Before, we relied a lot on the physical location where we were, and now we've got to make sure that we can identify who they are when they're just somebody out there on the other side of the internet. And so things like, if you've heard of the term multi-factor authentication or two-factor authentication, don't just rely on a password. We now need to have some other form of authentication to make sure that person is who they say they are. Number 5, are your employees using their own or company or organization issued laptops and computers? because you secure it differently. If I've got my own home computer and I want to access my my agency's data, there's a way that I access that. I can access that securely, and it's different than if someone's issued me an agency-owned laptop and I take that home. So that you just got to make sure whatever method you're using for employees to access the data, it's in a secure manner. And lastly, what solutions have you put in place to secure email from malicious actors? There's a misconception that I've said something from email and I said it to person X and that recipient is the only one who's going to see that. But email is not inherently secure. It is an insecure method of transmission. We need to make sure that if we're doing a lot more emailing, because we're now remote, we're offering methods to have that email sent securely and received securely by the person who's going to be receiving it. There was a couple other questions that came up. One of them was online. One was pointed ahead of time. I thought I'd just address those really quickly while I was here, because these are also important key considerations. Someone brought up the question about supervising remote workers and how do you make sure we're keeping connected? How much sure we know what they're doing? There's a little bit of an HR aspect of that, but there are things you can do to begin to continue to stay connected, set up ongoing touch points, regular touch points on a day-to-day basis. Make sure you're communicating expectations. There's actually a great article by the Harvard Business Review on a guide for managing remote workers. It just came out last month, and I'll actually post a link to that on the chat here so that everybody can see it. But it's got a lot of good information from some HR experts who really can help you understand how to begin connecting with those employees and staying on top of what they're doing. The other question that came up in the question and answer was about Zoom and video conferencing. We've probably all seen in the news this new trend of Zoom bombing, where you'll have a Zoom meeting just like the one we're having now, but there are malicious actors who are actually being able to hijack those Zoom meetings and either disrupt what's going on or post pictures that are offensive or have a particular agenda. So the question has become out there, well, is Zoom secure? And one of the things we try to help our clients see is that Zoom it can be secure. It really depends on how you set it up and how you establish a meeting. And so there are things you can do as an organization, standards you can put in place, both from a technology perspective, but also how we set up the meetings. If you do it correctly, Zoom it can be a secure method of communicating. You just have to set it up correctly. And so what I can do is there's actually when clients have questions about this, there's two articles I'll send to them. The first is Zoom's website has a whole page on security, and they've got a downloaded data sheet and some keys. Here's some key things to turn on and turn off when you're setting up a Zoom meeting that'll help it be secure. The other link I'll send is one from Forbes. Forbes had an article on how to use Zoom, and here's 7 essential steps to how you can take care of Zoom and make sure it's secure. So I'll make sure I post those in the chat there. But as you're going through this, if we've talked about some of these key considerations today, and you have questions on those, or you're wondering how do I know whether I've set this up correctly, please don't hesitate to reach out to us. We want to be a resource at this time. And if you've got questions about whether your workers are remote, please reach out to us and we can help you come to that determination or point you in the right direction. Back to you, Eric.
Thank you, Anders. I got one question for you. Let's say I am a person who has to approve a contract or approve a payment at my government, and I'm working at home, but also my kids are working at home, and and they have to dial in, or log on for their school. What sort of risks do you think there could be in that, and the fact that the kids are learning at school at the same time you're trying to prove a contract? I mean, what sort of risks are you seeing? And then I guess secondarily, have we seen any major security breaches as of yet, like we saw in Baltimore and Atlanta and so on last year? Have we seen any major security breaches so far in this crisis?
Security breaches, I guess the second part of your question, yes, security breaches continue to be steady. We just saw one from Marriott right as the crisis was ramping up. There was a huge issue with Marriott, this data breach with Marriott. So these things are not slowing down. I think they're just sort of drowned out by the other the COVID press, and it's getting a lot more attention. So, and rightfully so. But it's not a time to sort of relaxed because security is not an issue. It still is considerably something that should be on top of mind. As far as just working at home and your kids there, the only issue there is just a bandwidth issue, and I'm sure you've all been dealing with bandwidth issues because you got 4 kids all streaming a class at the same time you're trying to work. And that, but from a security standpoint, the way that websites and web applications are set up nowadays, everything is very much compartmentalized, and within the applications, within the web browsers themselves, and even on your network, there's not going to be cross mingling of data. Your kids are not all of a sudden going to, I don't know if this is what you were asking, Eric, but your kids are not all of a sudden going to start seeing any kind of purchase order you're trying to approve or any transactions you're doing. These things are very much separated from one from another logically, and so you wouldn't be able to necessarily, there wouldn't be any cross data bleeding between the two different activities going on at the same time.
Well, thank you, Anders. I always think of my soon-to-be 11-month-old grandson who is starting to learn how to play on a computer at the same time my daughter, who works for a federal agency, approving contracts. Oh, gee, will my grandson approve a contract going out to, for billions of dollars? Going out to the wrong person simply because my grandson logged in the wrong way at 11 months old. And
yeah, don't share your passwords with your 11-month-olds or your 11-year-olds. Try to keep that secret. I guess the only thing that what you might see is on some computers you've got if you've got Google will allow you to save a password, or if you've got like something like a LastPass, a password manager, these passwords will then be stored on the computer. So if you've got a work computer or a computer you do work on, just be careful who else is getting on that, because if you've got a saved password into a work portal, then anybody who's sitting on that computer can log onto that portal and get onto it. So just try to keep your work computer separate from your play computer where your kids are doing their stuff if you can.
Great
idea.
idea.
Don't save the passwords.
Great idea. All right, thank you, Anders. So, so with that, Brian Stavager, how are we going to do the audit this year? How are we going to get through? Brian, why don't you take us off here?
All right, thank you very much, Eric. How will 2020 audits be accomplished? Well, I can tell you we are in process currently with a lot of audits cross-eyed Bailey. Some of you in the audience likely are experiencing that as well. Others have upcoming audits. If you're a June year-end, maybe you're in the planning phases. I can tell you that we have been successful in getting audits in process, started, finished in certain cases. We've learned some things along the way. I think number one is communication and collaboration is key. I think if we're honest with each other, that's the key in any successful audit, but it's become even increasingly important. This will really be a theme for my 4 slides: communication and collaboration. Something that we've learned working with our clients, scheduling daily calls or maybe every other day just to get on the telephone together to talk through issues. Trying to limit emails. If you've got 4 audit personnel or audit staff working on the audit, don't have all of them sending emails separately to the client so the client is getting inundated with questions related to the audit. Try to limit those emails, maybe pool those questions together. The use of Zoom and doing it securely, as Anders just shared with us. Instead of daily calls, maybe you get on a Zoom meeting every day with the client. There are ways to make the successful communication and collaboration are key. When exchanging information, now that we're having to do it remotely, we can't just exchange information by sharing invoices. Make sure to use EB Connect, our secure online portal. Exchanging through email, as Anders just said, is insecure. Make sure you're using EB Connect or something similar, such as ShareFile. Is there an opportunity to provide auditors with electronic read-only access? I know in a lot of situations prior to all of this happening, We would have read-only access, maybe even a dedicated computer on site at the client where we can go in and we can search the database at the client and find the invoices that we need to look at. Is there a possibility now to do that remotely? There likely are a lot of challenges with that. One, ideally in our IT and allowing us to access it, but also at your IT department. So if that's not possible now, is that going to lead to a lot of scanning and uploading, some increased inefficiencies potentially? Just something to communicate and collaborate together with your auditor. We at Eide Bailly started using DocuSign for engagement letters within the last year. That has been going well. We're also going to do that now for representation letters at the conclusion of the audit. So that does lead to some efficiencies to be able to accomplish that still and continue to provide those letters electronically. Planning considerations. So if your audit has not yet begun yet, what are some things to consider from the audit standpoint or the auditor standpoint? We have some things we're going to consider. We wanted you to understand what those are because you may be getting some questions from us that you haven't had before. So as we go through our risk assessment process in any audit situation at the beginning during planning, we have to assess risk. Fair value measurements are going to be a significant risk assessment this year. Estimates, as you make your significant estimates on your financial statements, is that going to be different in today's environment? Are those estimates going to have to change? Are you going to have to consider some other criteria when doing those estimates? Impairments are a big thing right now in the pandemic we're in. Historical comparisons potentially could be irrelevant. If you are a junior end or later and you have months of your year that are being impacted, we potentially are going to have to better understand what that impact is because we cannot just rely on historical comparisons. As we're planning the audit and we are sending out confirmations or planning to send out confirmations, are we going to get responses? Confirmations with lending institutions, financial institutions, those have become more and more electronic in recent years. But what about notes receivable? If you're a city and you have an economic development authority and you issue loans, we typically send confirmations to those businesses or individuals. Are those third parties going to respond this year? Going back to communication and collaboration, let's talk about that during the planning phase. If you have an inventory observation, I know a lot of governments don't have inventory observations, but if you do, there are standards that require that if those inventory balances are material, we have to, as auditors, observe that. How are we going to accomplish that this year in this environment? There are ways to do that utilizing technology. Again, communicate and collaborate and determine what the best path is. As we get to the conclusion of the 2020 audit, subsequent event considerations. We're going to have a discussion this year on what management believes is going to happen in the next year, in the coming months and really in the next year. Are there potential reductions of operations? Is there a significant loss of revenues, tax revenue, utility revenue, the collection of those receivables? What about cash flow? How is that going to be impacted? And then consider, after all of those communications, those questions, the collaboration between the auditor and the auditee, what potential disclosure in the financial statements to address those subsequent events? And the last slide for me, there has been some guidance from the AICPA's Government Audit Quality Center. We're going to learn a little bit later from Eric on the extensions of some GASB projects. There is some specific articles out there on that Quality Center on remote auditing, helps us understand how to audit better, but also from a client perspective, understanding how it will be different. HUD has issued a 30-day extension. The due date's now April 30th. Data collection forms, if those were not filed prior to March 19th, there's an automatic 6-month extension. No need for any communication on your end. That's an automatic extension. So there are already some extensions that have been granted, but also understanding if there's potential lender deadlines, other regulatory deadlines by the state. Communication and collaboration, again, is key here. I think the key that we're understanding for audits this year, and who knows, potentially next year, we're still going to get them done. There just could be delays in issuance, and it's just working together to establish realistic timelines in this new environment, continuing to stay in touch with each other, communicate and collaborate, and we'll get through them together. The one item of significant importance that I thought would be better addressed by Eric Hansen would be internal controls. Internal controls in a physical environment can be a lot different than internal controls in a remote environment. So I will pass it off now to Eric to take you through that.
Thank you, Brian. This is Eric Hansen with our Fraud and Forensic Advisory Services Division, and today I am going to talk on fraud and internal controls. Slide up. There we go. So today we're going to talk about why employees embezzle. It's important to understand what our employees are going through, staff's going through during this time. But then, with that, what type of controls can we put in? From preventative and detective controls, the importance of them, some new challenges and examples we're seeing. So we can kind of go through some new situations with this remote work environment that Anders touched on and Brian briefly touched on. Some different levels, a checklist we have to share with you to give you some information, and as well as essential records to review. So this is the fraud triangle. The three reasons are the three components to why an employee would embezzle our staff. Pressure, we obviously know what the financial situation going on. People have bills to pay. There's pressure out there for our staff. Well, they have to have that pressure, then there needs to be an opportunity. Well, obviously with remote work, our internal controls are weakened. There's a greater opportunity now for employees to embezzle. And then they rationalize it. When you have an employee or staff that can't pay rent, and then they look at the bank account of the entity and there's 10, hundreds, millions, whatever the account is in there of the entity, they rationalize it, that I'm using it for a good purpose to pay rent. These are good people, good staff, they're just going through difficult times. Well, what we want to do today is we want to close that opportunity. That's, people can have all these pressures, but we want to close the opportunity so our staff doesn't even think about misappropriating funds or embezzling. So preventative versus detective controls. Obviously, we would love to prevent any problem. However, with everything going on right now, with staff working remotely, with our segregation of duties limited, physical safeguards and proper authorization, it might just not be possible. We might not be able to prevent every problem. So we're going to go to our detective controls. These controls happen obviously after the fact. They're there to identify an unauthorized transaction after the occurrence, such as doing independent checks on bank recs, adequate documentation for purchases, things like that. What we're trying to do with a detective control is we want to detect a problem the first time it happens or the first month it happens. We don't want this problem to go on for 6 months, 12 months, 2 years, because then it's obviously a much larger problem. We would like to catch it that very first time. And for these to be effective, they must be performed continually. That perception of detection. We can't just come in and do a bank rec 1 month, not do it 4 months, and then do it another month. It has to be continuous. That perception of detection is the most effective deterrent. I use the example, Fort Knox. No one's going to go rob Fort Knox when they know there's guards there. They're going to get caught. Things are going to happen. If we have our staff thinking, hey, they have controls, they're checking things. I can't steal this money. I can't make this purchase. I'm going to get caught. It takes away then that rationalization and that opportunity for them. So what is the importance of these controls? Obviously, we talked about to prevent fraud. We don't want our employees, staff stealing from us, but it's more than that. It's to reduce the possibility of mismanagement and errors. We want to improve the quality of the information, like the other panelists have talked about, with forecasting, with budgeting and planning. If we have errors in the financial statements, in the data, in these reconciliations, because someone is stealing, someone is changing the accounting, changing the budget, the balances, that affects a lot with what you're planning going forward and how you approach this. So these controls are important, not just to protect your assets, but going forward on your budgeting. And then the last thing is to provide a consistent practice for personnel to follow. I know everyone's job probably duties have changed, processes have changed, and people might not know what they can and can't do. So if we can provide some sort of consistent practice with, hey, here's our controls now, or here's our process now, here's what we're doing, here's what you need to do, those clear expectations, that is very important. So I want to talk about a recent example and some challenges that we're seeing now with this remote work environment. We had a situation, an organization reached out to us where they were noticing an increase in the amount of cash deposit shortages that were occurring. What they had going on was they had one employee at this location, and that employee then, obviously to keep the social distancing, was doing it all. They were receiving the money, preparing the deposit, making the deposit, entering in the accounting, doing all that. This organization, though, had that detective control, and they had an independent check looking at the sales data, looking at what funds should have came in, comparing to what funds did come in, and then they were noticing that these discrepancies in the cash deposit shortage, and they were able to address, and they were able to do it pretty rapidly, and so that was important. Some other examples and challenges that we're seeing specific to the COVID transactions, price gouging, with PPE vendors specifically, these items out there, they're raising the prices. Well, you guys and your organization need to determine, is that price, fair? Is that market price? That's just what we have to pay? Or could there be something else going on? Could there be a kickback scheme, some sort of corruption scheme where, they're paying an inflated price, and then the purchasing manager, whoever the individual is authorizing it, is getting a kickback? That's something to be aware of. Fictitious vendors. If some vendors are out of business right now and you have to go to another vendor, make sure to verify that vendor. Do your checks that you normally would do, and want to gather all the documentation. With fictitious vendors, a lot of times what we see and what they like to do is just change one letter of a name, similar to like a phishing email, where they just change one letter. Like Bailey, for example, they'll use one L instead of two L's in Bailey. Make sure that you're verifying new vendors if you start using them. And the last kind of example specific we're seeing, advanced payment on orders. Some vendors, they might be struggling for funds too. They need the money up front to fulfill that order. What we recommend in some best practices is, only do this for reputable vendors that you have a long-lasting relationship with, that if you give them the money, you're going to get your product. This is done to prevent a potential fictitious vendor from just taking those funds and running, as well as we want to make sure that vendor is in business and going to give us the product that we ordered. So those are some specific examples that we are seeing occurring. Kind of go through 3 different tiers of internal controls, some levels. Tier 1 is kind of the basic. This is your control environment. Hopefully these are already in place, but we want to make sure, and we want to make sure these are expressed and these are clearly communicated to the staff. Policies. Here's still a credit card policy. Here's still a P card policy. Background checks that you're doing these. Vendors, that you're verifying the legitimacy of these vendors. The next step up is that tier 2, that detective control, which is where most controls right now are going to be occurring. That we're going to catch at the very first time through a bank rec, looking at credit card or purchase card reconciliations, inventory counts. Obviously, tier 3 is our best. If you could do that, if we could prevent something, we would, right? The separation of the authorization, reporting, and custody. However, that's not always feasible in today's environment. So what we created for our clients and for others to use is this remote operations, limited resources checklist. We have it available. It's on our website in an article Anders and I wrote on remote work environment. I believe Nanette will follow up with attendees to provide it. What it does is it provides organizations specific transactions to review for, to look at, records to examine, and the processes to perform, to look from a detective side to see, here's what I want to be looking at. We know everyone is busy, our lives have been turned upside down. We don't have time to look at every single disbursement going out. So we've highlighted the most common ones, what we see it happening from a fraud side, and we want to help prioritize this for you. The areas of bank reconciliations and cash receipts are common. Inventory and payroll are kind of the common areas to look at. And share an example here from the checklist with bank statements. You know, transfers. You might not be able to look at every transfer, but if you sample and do that perception of detection, and you look at the large, even dollar ones, you know, if someone's gonna steal, they're probably not gonna steal $8,212.19, right? They're probably gonna make an $8,000 transfer to themselves or to some other account. So what we'd like to do is go look at those, request the documentation, you know, talk to the individual doing that if we don't have the proper preventative controls in place. If you can prevent that and have two people on wire transfers, on anything like that, that would be ideal. But if not, some detective things to do is go look at these. And then obviously if you check yes to any of these, you need to follow up and look at those, contact us, we'll help you through it. But that perception of detection, that you do this every month and look through these items, let staff know you're doing it, request documentation, that'll help deter anything from occurring, hopefully. So records to review, we kind of talked about the other panels, the communication, you know, getting records, how we're going to do this. You know, this is a challenge because we're not able to get stuff mailed to us, to our homes or things like that. And then we might have everything mailed to the office and one person there scanning things in and uploading it. Well, when we're doing these sort of transactions from a forensic side, from a fraud side, we need to ensure the accuracy and verify these records that they're legitimate records. So these records need to be accessed by an individual independent of the process being reviewed and or by a third party. So for example, bank statements. You know, we don't like to have the bank statements uploaded by the admin and say, here's the bank statements, here's the checks, because it allows for them to be manipulated, to be scanned in, to be altered, and then they obviously changed what they wanted to conceal. Nowadays with technology, you should be able to log into bank accounts, credit card accounts, accounting records, you know, remotely. You should be able to log in, even if it's read-only access. That's what we recommend, that whoever's doing the bank rec, whoever's looking at credit cards that does not have a credit card, obviously, needs to be accessing those records independently through those sites. Payroll systems and accounting, some things in the accounting software, you know, to be looking at. Look at the audit trail, you know, look at the check register and general ledger to see what's going on behind the scenes and what transactions are getting entered, modified, deleted, but doing so independently and from a third party so you understand those records. So to kind of end, I want to give you some action steps, some things to do, some things to consider. Obviously, don't overlook obvious signs of fraud, and if something's questionable, be skeptical about it. You know, use that gut feeling you have that, why did we do this? Even just asking for that documentation and looking into it, let staff know about that. So, you know, ask those questions. Like we talked about, that perception of detection is the most effective deterrent to fraud. A few things to expand on that. You know, you might have to change your accounting processes as, you know, as needed through this if you haven't already. You know, instead of doing check runs every week or things like that, you might be doing a lot more EFTs. You know, how can we be more efficient with this going on? Do we need to do all these check runs? And then if you do change processes, make sure staff understands and knows the new procedures. Here's the new procedures, here's the expectations, here's the controls, here's what we're doing. You know, it's okay to let them know what you're doing so they can be aware of that. and then obviously do a lot of those checks and testing. Do that regularly every month. Be going through. I'm not saying you have to do an inventory count every month, but you know, the high areas, the bank recs, the purchasing card, and credit cards. Be going through that. So with that, I'll turn it back to Eric to take it home.
Thank you very much, Eric. You bring up some really great points, and you know, a bunch of our clients and friends have called us over the past few weeks or emailed us over the past few weeks asking for ideas and tips and what do we think, especially in terms of, you know, fraud and cash flow analysis and so on. And one thing I said to a client a couple of weeks back after the CARES Act passed, I said, you know, a lot of folks throw around the figure of 5% of every transaction is deemed fraud. And 95% is good, 5% is deemed fraud. Well, if you take the entire CARES Act times $2 trillion times 5%, that is $100 billion. Okay, so take your government's budget, and how many years can you budget for that $100 billion? And that's just flat out fraud. And so it's our jobs on the front lines to really take a look at this and have our senses up, you know, while we go through this crisis together. And also Eric mentioned the importance of cash flow and preparing a cash flow analysis and comparing what actually occurred to what you predicted, and certainly it could show fraud. And again, over the next couple of weeks, we're going to come back and have another town hall on budgeting and cash flow analysis. So, at the outset of this session, I did mention that the GASB is even doing something. And as it says here, will the GASB provide relief? Well, indeed, breaking news. Actually, less than 48 hours ago, they did release an exposure draft. That's not a final standard. An exposure draft proposing to extend all pending GASB statements and implementation guides that have not been implemented yet for 1 year. And again, it's just a proposal. We'll see how that all transpires, but within the scope is the ones that caused us a little bit of angst over many of our governments over the past 6 months or so, GASB 84, and certainly the forthcoming GASB 87 is indeed in scope. So for those handful of governments out there that have not implemented GASB 83 and 88 so far, all the way up to GASB 93, those pronouncements are under consideration. You know, and again, it includes GASB 93, which was approved earlier in March. And so a lot of things are on the table, including Statement 91, Statement 84, Statement 87, and so this could provide some relief. And again, this was just approved for release. It was posted on GASB's website late yesterday afternoon. The potential outcome, it does have a 15-day comment period. Actually, the GASB had to suspend the rules on Tuesday. Usually it's a minimum of a 30-day comment period. They had to suspend the rules and say only 15 days. And again, a potential 1-year delay. An early application of existing standards, though, is encouraged. And what am I meaning there? So, you know, let's say you're a government out there that has implemented 83 and 88, and hey, let's say you're a government out there that implemented GASB 84. Great, you're ahead of the curve. keep it up and perhaps begin implementing GASB 87 if you can. In many cases, for governments with less than 50 leases, for example, it might not be that tough to implement GASB 87. And in fact, our firm already has a number of engagements going on with governments already wanting to implement GASB 87. So we're saying to those governments, keep it going, keep it up. But also remember, when you do implement a GASB standard, it's either all or nothing. And so you have to implement it all as written as it's applicable. And don't forget the implementation guides as well, because those are not authoritative. Now, will I just drop my pencil and stop implementing GAP, especially GASB 84 and 87 today? No, don't do that, because it hasn't been approved yet. And as I say on this slide, don't count on the GASB doing anything until the ink is dry. So there's some additional information from the GASB. They've already provided relief in 2 additional standards. GASB 93, replacement of interbank offered rates, has limited application to many governments. And that date was already delayed. It could be delayed even further, especially since there are 2 paragraphs that are built in there that might impact GASB 84 leases in the case of variable rates that are pegged off of interbank offered rates or LIBOR. And there's also talk among the global banking regulation community to potentially delay the sunset of LIBOR simply because of the COVID-19 crisis. GASB 94 was approved with a year delay from the original exposure draft. In addition, outstanding exposure drafts could be delayed based on the outcome of this project. For example, the implementation guide update that was approved less than 48 hours ago, it was unusual in the fact that the 2020 implementation guide update was approved with an implementation date for periods beginning after June 15, 2021 or December 15, 2021. With the exception of 3 questions that implemented that were involved with a controversy with GASB 84. Those questions that were in the GASB 84 implementation guide have been suspended indefinitely until there's a resolution on the project for the delay. Subscription-based information technology arrangements is still out there, and it should be approved by June. So what do you do? There are things you can and should consider for your financial reports this year with regard to what's going on with COVID-19. First, for reports that have not been finalized for December and March 31st year ends, you really should consider changes in your management's discussion and analysis. Don't just roll forward what you did last year, because as Brian mentioned, a lot of assumptions that we had for last year, they simply do not exist. You do have a currently known fact, decision, or condition going on with respect to COVID-19. And you also have to realize that your management's discussion and analysis is dated as of the date of the auditor's report. So it's not just as of December 31st or March 31st, it rolls forward to the date of the auditor's report for the analysis of currently known facts. So if you have some CARES Act funds that have been awarded, let's say you participate as part of the MLF, let's say there are other stimulus funds and so on that are available to you and have been awarded. Let's say that you've done you've suspended tax revenue collections and so on. Those should be in your management's discussion and analysis if the impact is known as a currently known fact. You should consider any budgetary impact that are likely to be significant and potentially consider unfortunately, whether your government has a going concern issue, especially if your government depends on revenue that is highly impacted by COVID-19, such as a convention center or stadium where no events are occurring or scheduled for the foreseeable future. You should also note CARES Act, again, CARES Act funds that have been awarded, or any significant changes to your tax base. As an example, if a major taxpayer is shut down or has a high probability of not reopening, the tax base might be impacted. And I'm thinking, of course, of things like transient occupancy taxes, hotel, motel, anything related to travel and tourism or discretionary spending. You may want to analyze whether or not your tax base has been significantly impacted. Remember, there are two types of subsequent events, those that are recognized and those that are not. Recognized would occur as of the date of the statement of net position. So for you March 31st out there, yeah, you probably have some COVID-19 going on, but not the 12/31s or maybe not 6/30. But for 6/30 coming up, there may be other stuff we need to consider. Non-recognized events would be just note disclosure and perhaps information in your management's discussion and analysis. Brian mentioned investments. You really do need to consider investment impairment, especially for things like defined benefit plans and investment pools. Remember, impairment may also include liquidity, such as dividend payments. As of the date of this webinar, Standard & Poor's, for example, has projected that 60 out of the S&P 500 companies are susceptible to dividend cuts. I read that this morning, especially those tied to travel, leisure, gaming, and so on. Certainly we're going to find out during this period of earnings disclosures whether more will be added. But you may want to consider what I did in 2008. We polled our investment managers and asked them in writing if any investments under management were permanently impaired. If the answer was yes, then we redid the valuation of those investments as long as if it was significant. If there was no impairment considered, we did a note disclosure to the investment note. You may want to pay really close attention to private equity, especially in this crisis, as to whether or not that investment valuation is indeed impaired. One thing that in terms of other considerations, over the last 48 hours, the GASB has posted an emergency toolbox for disclosure considerations on their website. And certainly I thank board member Jim Brown from Missouri for pushing this. He really wanted to see this happen. And sure enough, the staff put this together. You should consider disclosures and in some cases potential liabilities in these areas. And there could be a number of things that you could consider. For example, derivative instruments, there could be a termination that is involved if a counterparty fails to pay. Certainly governments are taking a look at their operations and see if a operation needs to be consolidated or even disposed of. Governments may be thinking of terminating employees, and certainly if there is a plan for terminating employees or providing early retirement incentives, the termination benefit standards may come into play. And a liability may need to be declared depending on the nature of the termination benefit that goes on. As we know, some of those termination benefits impact pension liabilities, and so certainly your actuary will need to take a hard look at that in preparing your pension liability. Non-exchange financial guarantees could be greatly impacted, both at the guarantor as well as the government that was supposed to pay the debt. That was something that was mentioned on the webinar right before this one, put on by Volcker Alliance, is that the bond community is starting to see a little bit of an uptake on non-exchange financial guarantees being exercised. Here in the city where I am at, the transit system announced yesterday that on their revenue bonds, no matter what, that they're going to be paying those revenue bonds with investments already in hand. And they think that they are secure through January, but after January, who knows? And many transit systems may be facing the same thing. Obviously, I mentioned subsequent events. Extraordinary and special items. Certainly, if there is a great financial impact to your government out there that is out of your control, that could be an extraordinary item. Certainly, if you're considering re-amortizing certain assets or liabilities, that could be an accounting change or even a prior period adjustment. We've all now entered into perhaps what's called a new normal. All too often, we focus on a risk-based approach on whether a material misstatement may occur in our financial statements. But over the past few weeks, it's been shown that there are other risks we need to think about, especially involving our people, our data, and of course our citizens. You know, in many cases, we were warned about this possibility. After all, we've been through MERS, SARS, AIDS, terrorism, infrastructure failure, and many natural disasters. And perhaps those risks are as important, if not more important, than the risk of material misstatement that sometimes us auditors ask you about. So, in other words, shouldn't risk be gauged on how many ordinary citizens may be impacted from the risk? And this is something that was put in the Journal of Accountancy a couple of weeks ago, and it's something that I think you got to think about as you go forward in your operations into this year, is that don't just focus on the numbers, focus on the operational impact of what occurred. And maybe that's the lesson that we're going to learn from all of this new normal. So before we get to some questions, just some final thoughts that I want to leave you with. Two segments of shows on Sunday of this past week, on Easter Sunday, were kind of highly inspirational to me as a former public servant and one who serves governments. On CBS Sunday morning, there was a segment talking about leadership. And many of us know retired General Stanley McChrystal. And the general led the Joint Special Operations Command, the SEALs, the Delta Force, you know, among the most highly trained and lethal warriors in the United States military. And he said something very profound. He said, I think leaders have to be brutally honest with themselves about what the real situation is and what they're trying to do. But then I think I have to be extraordinarily candid with their followers. One, it's a sign of respect. And two, it's just essential for long-term effectiveness. And the general went on to say, there are really two viruses going on in this country. The one is COVID-19, and the other is fear. And the fear can be almost as damaging as the disease. You're in charge, so what do you do? And the general said, well, fear is natural. And you know, I've been scared. I'm a general, and I've been scared. I'm scared by the COVID virus here recently, and so you think first and admit fear. The one thing that he said is, I admit that fear is not a sign of weakness. Fear is usually a sign of good sense. Now, fear should not put us into inaction. What fear should do is it should motivate us. It should be something that causes us to be more cautious, but not slower in how we operate. And then later on Sunday, on 60 Minutes, there was an interview with jazz musician Wynton Marsalis, who unfortunately lost his father last week. His father was in New Orleans, and which is, as you know, is a hot spot in Wynton. Marsalis was in Manhattan, also a hot spot, of course, and it was truly a tragedy. He said, we're all going through tragedy as a community, losing loved ones, missing celebrations, and so on. We're all part of the same family. And Marsalis added something that I think is very important to us as public servants and those who serve the public sector. He said, we're in a bad position, and we're not going to get out of this overnight. But everybody is in our position. So let's embrace this. Let's work on the trust that we built up all of these years between all of us. Let's get out and make stuff happen that we want to see happen. We have to move very fast, but we have to be even more process-oriented and more deliberate. And that's how you master a moment of chaos. And that's the strength of jazz. And you would think that a jazz musician did not understand internal controls, but that's exactly what he's talking about. We're all grieving together, but we also need to hope for the future. It truly is our jobs and what we do as public servants during this time to be brutally honest with our superiors and our team of what the real solution is. And if we don't have the answer, then let's say it. Let's have a plan on how to get to the answer if it's our responsibility. We need to do something for our communities. Let's be the leaders who we are and like we have always been. So with that, Nanette, how are we doing in terms of questions?
We're doing good. We have a few questions. If we have a little bit of time, we can go through them.
Sure, we got a couple of minutes.
Okay. Going back to the beginning, there's a question that says, the slide mentions governments aren't eligible for tax credit reimbursements under FFCRA. Does that mean 501c3s as well as local governments change this?
So I think that would be Derek or Brian. What do you think on that? If you're on mute, it's okay.
Yeah, that's a pretty unique situation. One that I think I would want to do some research and maybe bring our nonprofit partners into that question as well to determine an answer for that one. So maybe that's one we can answer on FAQ subsequent to this webinar.
Absolutely. Okay, we'll get that sent to you. We have another question. Is there a typical shrinkage percentage on materiality percentage of gross value for unfound items during an inventory that you would typically see for a school district?
Oh, that's a good one. You know, certainly, you know, Eric and Brian, you know, I mentioned 5% as built into almost every transaction as fraud. What do you think in terms of shrinkage for a school district based on your knowledge of school districts and audits? Brian?
Brian, if you have it, this is Eric Hansen. Typically we do, you know, there is a shrinkage. I don't have that percentage or data right off the top of my head. Brian, do you have anything to expand on that, on what you would maybe see?
Yeah, we're having a little problem with Brian's mic. We can certainly, go ahead, Brian.
Here I am, here I am.
Okay.
Yeah, I would say 5% is probably high to apply to a school district, and the inventory, it's probably closer in my experience to 1 to 2%, but that's top of my head without any data to support it at this time. We can certainly go offline to get a better, more direct answer to that as well.
Certainly, I think that in this time of crisis, you know, a lot of folks are taking drastic means, and that's just empirical. You know, I happen to be sitting across the street from a big school, and sometimes you do see what looks like teacher personnel going in and out of there, and they actually just relocated a fire station there. So God only knows what's going on in terms of the inventory in that school. and so so clearly there could be some stuff going on. We only have really time for one more question because we're at the bottom of the hour. Nanette, one more quick one.
Okay, if a jurisdiction extends tax due date into the next fiscal year, can the tax revenue be incurred in the current year, or is it hit in the current year?
I'll take that one. Well, there's two answers to that. One, it depends on the jurisdiction's laws, regulations, and so on that they have to abide by. So, for example, if you're in Colorado, there are pretty specific laws. California, pretty specific laws. Here in Massachusetts, certainly specific laws embedded in the Constitution that you can't change as to revenue recognition. And so, the first thing I would do is explore that question with your general counsel or with your legislative body to see how that can and should be recognized. From a GAAP perspective, you obviously have to take a look at your revenue recognition policy. And certainly whether or not any of that is going to be have to be adjusted as uncollectible. Historically, over a space of a number of years, things like property taxes and so on certainly are collected. The vast majority of them are collected over a space of a couple of years, and high 90%, and very little is written off with regard to property taxes. Income taxes, sales taxes, that's going to be a different story. Do want to thank all of you for what you do on a day in and day out basis to serve the public, and I thank you for joining us today. And again, stay tuned. There's going to be more information for you over the coming weeks.